Hello, traders and investors. Steve Gans here, and welcome to the weekend update for June 7th, 2025. Now, before I get into the update, two quick things. One, if you like this sort of content, please like, subscribe, give me a thumbs up, and/or any comments you might have that will help guide me with additional content going forward. And then secondly, toward the end of this section, I'm going to share a trade concept or a trade idea with you. And feel free to take a look at that. I'll include a link to OptionStrat so that you can simply click on that link and open up that particular trade so that you can study it, paper trade it yourself. So stay tuned toward the end of the weekend update for that trade suggestion and idea. Okay, so let's get into it. Let's take a look at the SPX, which we can see continues to power higher here. And some of those up days had very significant volume associated with them too, which is pretty bullish. Now, that said, we literally ended Friday right on that 6,000 mark. Many times those big numbers can be resistance areas. And as you can see, this also ties in with a prior support and resistance level. So it's going to be important if we're going to continue higher that we get through this week, that we maybe have a close on Monday that's going to be maybe 10, 20 points decisively above the 6,000 mark. If that happens, I think we're going to see another shot up, probably hitting these old highs here. So if not, if we end up closing below that 6,000 mark on Monday, then I think we're probably in for just a little more sideways chop, possibly a bit of a down move as well. But I would say nothing really dramatic or significant, unless, of course, there's something news-driven that blows us through all of these levels. And right now, I think that we're more likely to have news that would move us to the downside than the upside. I feel like a lot of the upside catalysts are already baked in here at this point. But again, the market is definitely in a bullish mode right now on the SPX. SPY, of course, is going to look exactly the same because it is just 1/10 of the main SPX index. It's, of course, an ETF. The volatility in the SPY is pretty darn low. So that's also a bullish sign. Now, that volatility is something that helps me decide the type of trade that I may want to consider here toward the end of this video. So again, stay tuned for that. Also, if we take a look at the Qs, very, very similar pattern, also rallied pretty hard here. What's interesting about the Qs is some of those down days have bigger volume than the up days had. So that's a little bit in my overall bullish stance on the Qs. But again, the Qs also have broken out recently here. They've broken out above a prior area, and they could certainly continue to these old highs as well. So same thing kind of goes with the Qs that I said with SPY. Volatility for the Qs, also pretty darn low, not all-time recent lows, but definitely to the lower side of the equation. And then we have IWM or the Russell. Now the Russell showed a little bit of surprising strength here, popping out of this cup and handle pattern. So if you're not familiar with that pattern, many people will define this as a cup and then this little bit up here as a handle. And if we go sideways a day or two on that, it's likely to move higher. Cup and handles, more often than not, will tend to be an upside type of move that follow them. So again, I think on IWM historically is significantly weaker than what the others have been. But right now, it also is showing some strength. And volatility on Russell is pretty darn low as well. Okay, so now that we've kind of done that analysis, what type of position might I look at right now? Well, let's look at the factors here. I am bullish for the most part. I want defined risk. I pretty much always want defined risk in my trade, so that's going to be a second characteristic that I'm looking at. I want to buy things when they're cheap and sell things when they're expensive. Right now, we're going to be to the cheaper side because volatility is low. So I'm going to be more of a buyer of options than I would be a seller right now. So what might I look at? Well, I would look at a bull call spread in the Qs, or actually possibly the SPY. Remember, I think the SPY was maybe a little bit stronger, or even IWM, because IWM was breaking out in that cup and handle pattern. But the IWM hasn't built out the handle of that yet. If there was a couple more days on that handle, I'd feel a little better about that. So I'm going to look at a bull call spread. That basically means that I'm going to buy one option, in this case a call, and I'm going to sell a second option. And if we take a look at what this looks like at expiration, it's going to look something like this. So this trade as it currently exists here is going to have roughly a $243 debit. That debit would be my max loss in this trade. And I'm looking at a max profit of $256 and about a 42% chance of profit. So I like this general trade setup if, in fact, I think that we're going to break through that 600 and possibly move a little higher. But I may want to move this down just a little bit here. So by moving that down, there's a couple things you'll notice. One, I increased my debit a little bit, but I decreased my max profit. But what did I get by decreasing my max profit? I got a higher percent chance of profit. This is going to be more likely now to generate a profit by the end of the trade. So this is the balance that a trader can look at and decide using a tool like OptionStrat, for example. Well, at the end of the day, I feel like I want to be somewhere in between there. I'd like to be maybe in the middle. I like to have about a 50% reward to risk ratio on my trades. I think that tends to be a good way to kind of model these. So if I go with these strikes right here, I'm going to have a $260 debit, and I'm going to have a max profit potential of 240, and I have a reasonable chance of profit in this trade. So that's going to be the one that I am going to save here. And I'll go ahead, I'll save this trade, and I will copy the link. I'll share the link in the description down below. You do not have to have an OptionStrat account. Simply click on that link and it will open up this exact same page. And then you can come in and model this yourself. You can come in and say, well, gee, what if I did this? Or what if I did that? Now, I'm also using a June 16th expiration, which is about 9 days away. So I need this move to happen in a relatively short period of time also. So those are the parameters around this particular trade, and that's going to wrap up the weekend update.